Take a look at Caterpillar missing third quarter estimates hit by weak equipment sales as demand falls. The company also cutting its annual sales forecast. We obviously look at this as an economic barometer to some extent of maybe what this tells us more beyond in terms of that macro spend and where we are seeing some strength and or weakness here within the economy. Construction equipment sales, that fell 9% from a year ago. The company seeing 2024 sales and revenue slightly lower than it had expected. Of course, that's contributing to that about 2% drop that we're seeing in sales today. Now, Caterpillar very much viewed as that bellwether, like I just said. Muted economic conditions in industrial sectors throughout the third quarter really provided very little positive momentum for the stock beyond some of the headline groups that have been able to outperform. Is something that Jefferies called out in their note here this morning in reaction to this. So again, weighing on the broader market to some extent. You look at Caterpillar, you can see the drop here today on that 5-day chart. But again, not too big of a decline to the downside here, off just about 2%.
No, and it was the second straight quarter, I believe, that they actually trimmed that revenue guidance. I think they trimmed it back in August, then trimmed it again today. So it makes sense to see a little bit of weight on shares. Also interesting that they called out inflation in this call, saying that prices remain high. That's been a headwind for them. But I think overall, when you talk about it as an economic barometer, some of the machinery that Caterpillar sells would probably be in that manufacturing sector that has been in contraction largely for over 2 years, right? So I don't really know if that's a fresh read necessarily on the economy, and maybe it's not that big of a worry. That's what a lot of economists have been saying when you get different reads on the manufacturing sector right now, when PMIs come out every month and they're weak again. Well, we just keep seeing it weak. We've been seeing it weak for 2 years, but the economy's still growing. So how much does that matter? I think people sort of argue about that, but the prevailing take seems to be maybe not as much from a macroeconomic perspective. But Caterpillar stock, again, something I keep bringing up with these earnings, it's done pretty well this year, right? So to see a little bit of a hit after rising over 50% over a year, that's just kind of how earnings work, right? If you disappoint the street on certain metrics, on sales metrics, as we talked about yesterday, right? Highly in scrutiny right now, your stock's going to take a little bit of a haircut, but only down 2%. Really, I would probably argue actually not bad.
Yeah, and I think also just looking ahead to the guidance in 2025, those talking about those macro issues, not expected to really change much or really move the needle here between now and then. So again, some of the issues, some of the overhang here on the stock that is causing a bit of a disappointment here this quarter could be likely then to continue as you look ahead to 2025.